Hey everyone, welcome back to the channel, your number one source for income-oriented investing, how to generate passive income from a diversified portfolio of high-yield funds. And speaking of high-yield funds, there's a very unique type of fund. It's actually a closed-end fund here in Canada on the Canadian stock market called the split share fund. And I know many of you are fed up of them, especially now because most of them are Canadian market oriented and the Canadian market is down, which means a lot of split funds are under their NAV, or their unit NAV is under $15. And guess what that means? No dividend payout. So a lot of split share funds have not been paying out dividends, like FFN for a long time. DGS, I think we're going to be, and I'm filming this on August 17th. I think they're going to miss the September payout. That's like 5 or 6 months in 2023 that it's missing dividends. I also feel like DFN will probably miss its September payout. So many of you are getting fed up with split share funds, and myself included, because 2, 3, 4 years ago, there weren't all these amazing leveraged covered call ETFs on the market. We've been really spoiled for choice in the last couple of years. So I figure I'd do a quick video to really go through what I feel are the best replacements for some of the most popular split share funds. If you're really getting fed up of missing the dividends, I'll give you a couple of high yield ETF alternatives where you don't have to worry about missing dividends, because as you know, that's only with the split share fund. It's how they're designed, right? So of course, in this video, I will focus on leveraged covered call ETFs, because split share funds, as we know, they are leveraged, they do covered calls, and they have quality stocks. So I'm really gonna focus on leveraged covered call ETFs in this video, because those literally have the 3 best characteristics of a split share fund: quality stocks, covered calls, and leverage, without the negative of ever missing dividends, because they don't have that $15 unit NAV rule. So let's get started. Let's check out some great alternatives to the most popular split share funds in Canada. All right, everyone. So by the way, in this video, I'm going to focus on the ones that really, have missed dividends, or the ones that are very susceptible to missing dividends, and ones that actually have a good replacement. So things like RS, ENS from Middlefield, they've never missed a dividend. I don't think they're ever going to miss a dividend, because if they're really, really high quality and high unit NAVs, there is no covered call leverage ETF alternative to those. And then you also have something like a GDV from Brompton, which is the global dividend stocks all around the world. That's never missed a dividend. There's no real global covered call ETF with leverage. There is BMAX, which has a Brompton global dividend covered call ETF, and by default, you're going to get the leverage because BMAX has leverage, but there is no direct replacement for GDV as well. So I'm excluding those 3. I'm going to focus more on the more bigger, popular, and ones that could miss dividends or have missed dividends. So we're going to start with DFN and DGS, the most popular, the 2, I believe they're the 2 biggest split share funds in Canada, and they both encompass the overall Canadian market. So DFN, so obviously they're very financials heavy. You have DFN here, there's about 15 to 20 holdings. You have the holdings here. So, a lot in the Canadian financials, but you have a lot of stuff like Enbridge and TELUS and Bell, etc., etc. DGS, same type of concept. It's the overall Canadian market, except it is a little bit more broad and diversified than DFN. So you have a lot of financial stocks, a lot of energy stocks, but you also have stuff like restaurant brands, International, Dollarama, Alimentation Couche-Tard, Canadian Tire, etc., etc. So DGS is definitely more diversified than DFN, but both of them really are trying to encompass the overall Canadian market. So I feel like the most no-brainer direct replacement is gonna be CNCL, which is a newer ETF that just came out from Horizon. CNCL is, look at this yield right now, 12.70%. So of course you're not going to get 15 or plus like DFN and DGS when they pay, but you have no worries about missing dividends with CNCL. And CNCL is actually a leveraged version, or if you click on holdings, it's just CNCC with 25% leverage, or 125% exposure to CNCC. What is CNCC? It's the Horizon's Canadian Large Cap Equity Covered Call ETF, which has a 10% yield. So obviously you add 25% to that, and you'll get approximately 12.7% yield. So what's in CNCC? It's very simple, guys. It's HXT ETF with covered calls. They're writing covered calls on HXT itself. What is HXT? It's the Horizon S&P TSX 60 Index ETF. It's the top 60 Canadian companies, which represents like 95 of the Canadian stock market. So think of the TSX 60 index like the equivalent or the Canadian equivalent to the S&P 500 on the US. So this is a broad-based index fund that's really giving you the top companies in Canada. Very, very, very well diversified. So, this is really a direct replacement, in my opinion. Of course, I'm talking about CNCL because it has leverage. But if you don't want the leverage, CNCC is a good option. And especially now because, by the way, they lowered the management fee to 39 basis points. So, really, really good direct replacement for either DGS or DFN because you're capturing the overall Canadian market with covered calls, with 25% leverage. Another replacement for the overall Canadian market would be HDIV. This is ETF is just celebrated its 2-year anniversary. I have a video coming up on it. Actually, that video might come out before this one. And this ETF is a good overall Canadian replacement, kind of. It's not direct like a CNCL because it's not just Canada, but the goal of this ETF is actually to track broadly similar, so it's not going to be perfect, the same index, the TSX 60, which is overall Canadian market. So the yield is, Canadian market is down, so I think the yield is much higher than this. It's probably close to 11% right now as I'm filming this. And this ETF has proven that it's actually beaten the TSX 60 by 4% annualized since inception. So very, very good performance here. You could see here it's comparing HDIV in red to the TSX 60, which is kind of like the XIU ETF, and it's beating it. What's inside of it here? It also has really nice distribution increases. And what's inside of it? Well, it's a collection of covered call ETFs, and on top of the whole structure, there's 25% leverage. So it's very financials heavy. You could see here financials makes up 30%. Of course, that's what most of the Canadian market is. So you have HMAX and HFIN, which are Canadian financials. HMAX is a covered call ETF. HFIN is not a covered call ETF. You also have UMAX, which is the Canadian utilities, all the best utilities. And then you have HUT, same thing without the covered call. So HDIV is actually, I cannot consider it now a full income oriented fund. There is a bit of growth in there because the HFIN ETF and the HUTS ETF, which makes up about 22% of the fund, is actually growth. It's not covered call. There's no covered calls on HUTS and HFIN. But you do have this one here, which is Canadian financials with covered calls, all the best Canadian financials. You have NXF, which is the best energy companies all around the world, including Suncor and Canadian Natural. But there's other things in there like ExxonMobil, Chevron and Shell and BP, etc. And obviously it makes sense because the Canadian market is very energy focused. You also have a nice chunk in GLCC, which is gold producers. Materials is a significant chunk of the Canadian market as well. But what's special about this one, it also has two very underappreciated or underrepresented sectors in Canada: technology and healthcare. So there's a technology and healthcare covered call ETF, both from Harvest and HDIV as well. So a really also another good thing to consider if you're trying to find an all-in-one to replace, the overall Canadian market, to replace DFN DGS. And last but not least is going to be HLFE, which is the leveraged version of HLIF. So it's HLIF with 25% leverage, which is translating to almost a 10% yield right now. So what's inside this? Well, like the name says, Harvest Canadian Equity Enhanced Income Leaders ETF. What's inside of it? 30 of the best or top quality Canadian dividend stocks. You'll recognize a lot of them. This is also kind of like getting the overall Canadian market. You see here financials and energy is always at the top. You see the 30 stocks here. You could scroll down. You'll recognize a lot of them. It's all the usual heavy hitters here. So HLFE, HDIV, and CNCL would be my top choices to replace your DFN or DGS if you're looking for a replacement for, a Canadian replacement. You could obviously replace DGS and DFN with other things, but if you want to keep the same type of stocks, the overall Canadian market, these are your top three choices in my opinion. Now there's a bunch of financial split share funds. So you have FFN, FTN, you have L from Quadrivest, you have, and they have a bunch more, a bunch of other financials one. There's also LBS, SBC from Brompton, LCS, the life insurance one. So the most common split share fund in Canada is really focuses on financials. So let's go over that, my top financials choices where you could replace those. Okay, so when it comes to the Canadian financials, the three highest yielding funds, I own all three of them, are going to be HMAX. This is the Hamilton Canadian Financials Yield Maximizer ETF. The yield is it's very close to 15% now because the Canadian financials are suffering. What's inside this ETF? The top 10 Canadian financials. The 6 banks are here. That makes up about 75% of the fund. But you also have Brookfield. You also have Manulife, Sun Life, and Intact Financial, some insurance companies as well. So the only thing with this one is it's covered calls. It's at the money covered calls on 50% of the portfolio, but there is no leverage. If you want a leverage option, because split share funds have leverage and covered calls, you could consider Bank. Bank is from Evolve, and it just like HMAX, 10 companies, a lot of the same companies. It's equal weighted, however. HMAX is not equal weighted. As you could see, Royal Bank and TD, BMO, BNS make up like 60% of the fund. So this is not equal weighted, whereas Bank is equal weighted. So the 10 companies all have the similar weight. So you have the 6 Canadian banks again as well. And also you have Manulife, Great-West Life, Power Corp, and Sun Life as well. So very similar stocks, except Bank does have covered calls and leverage. So you're looking at a yield of about 15% as well. Right now, they recently increased their distribution as well 2 months ago here. And a third option, this is the newest option, which is going to have the highest yield, is BKCL from Horizons, a new ETF that just came out when CNCL came out. It's literally the big 6 banks with covered calls and leverage. So if you look at the holdings, it has a BKCC. If you look at BKCC, what does BKCC have? BKCC with 25% leverage, of course, or 125% exposure to BKCC, which is just the big 6 Canadian banks, guys. That's it. So the difference between BKCL and a Bank and HMAX is that HMAX and Bank have 10 Canadian financials, including some life insurance and maybe some asset managers like Brookfield and HMAX. BKCL is just the big 6 Canadian banks with covered calls, with leverage, and you're looking at an almost incredible 16% yield. So this is a great replacement for things like that only have the 6 banks. Things like Pick.A from Mulvihill, of course, SBC from Brompton, which only has the 6 banks. You have LBS from Brompton, but that has the 6 banks and 4 life insurance companies. FTN FFN, very, very Canadian financials focused. So this is a great thing to swap into if you're looking for a high yield fund replacement and you don't want the split fund. FTN and FFN, however, do have a lot of American bank exposure, and unfortunately there is no leveraged US banks covered call ETF yet on the Canadian market, but your highest yielding option is going to be call. This is the one that I own. This only has US banks covered calls, nice yield of just under about 13% now. You also have ZWK from BMO, about 11%, and you have Hubble, HUBL from Harvest. So all 3 of these ETF are they're not leveraged, they're covered call ETFs on US financials. So in case you're giving up FTN and FFN, which has a lot of US financials, and you want to get some US financials exposure, you could check out these 3 ETFs, call being your highest yielding option. And don't forget that HDIF, the all-in-one leverage cover call solution from Harvest, which I really love and I have a lot of, one of the ETFs inside of it is the Hubble ETF, the US Banks ETF, which is this one right here. So you could, by having HDIF, it's kind of like having indirect exposure to the US banks, but a really, really significant portion of the portfolio, 18%. So hopefully this video was informative for you. There's a lot of great leverage covered call ETFs now that have come out recently that could easily replace any of these split funds in case you're getting fed up of them. If you have any other ideas or did I miss anything, let me know in the comment section below. Let me know. But again, I didn't find, there's nothing that could replace RS, the real estate one from Middlefield. ENS from Middlefield is just Enbridge. I guess you could get ENCC because Enbridge is in there, but it's not leveraged. And you have GDV from Brompton, which is global. There's no real global covered call ETF with leverage. BMO has ZWG and Brompton has a covered call global dividend stock one, but none of them are leveraged, unfortunately. So that's it. See you next time. Hey, don't go yet. A few reminders before you leave. Did you know that I launched a YouTube loyalty membership program where for only $3 a month, you could become a PII Inner Circle member, where you will gain access to exclusive content, exclusive videos and live streams, as well as other perks and benefits, including a really cool weekly opportunity report. That's right. If you're interested, just click on the little join button next to the subscribe button to see what it's all about. Also, make sure to follow me on Blossom and download Blossom. It's a social investing app, which is really cool. You could share your portfolio, follow other people's portfolios, including my own. My username is Adrian_PII. So download it with the referral link below. Not only is it free, but you could actually earn cash by taking these really small, quick 1-minute courses. Really awesome. It's a no-brainer. Also, make sure to visit our website, passiveincomeinvesting.ca. That's where you could book a one-on-one private coaching session with yours truly, with myself, where you could ask me all the questions you want. All the information and booking information is on the website. Make sure to check out that video on the homepage there to see how to book a one-on-one properly. Also on my website, you could purchase my digital product, which I'm very proud of, the ultimate DIY investing package. This is a reference tool or a companion tool that will help you build your own portfolio. So it has lists of funds, it has sample portfolios, and it covers both the Canadian and US stock markets. And the good news is you'll only ever have to buy it once because it comes with free lifetime updates. And my plan is really to update the version every single year. So make sure to pick it up. Also, I have Questrade and PASSIV referral links below. So Questrade is the broker that I personally use, and PASSIV is the broker companion tool or assistant that I use. Really cool program, really cool software. So I have referral links for both of those. Questrade, $50 of free trades. And PASSIV, I have half off for the elite membership. If you're interested in the elite membership, and even if you want to start out with the free membership and upgrade to the elite afterwards, use my referral code so you could still get that 50% off. And don't forget that the elite membership of PASSIV is 100% free if you use Questrade. For social media, we have a very successful and big Facebook group, private Facebook group with over 14,000 members, where we all try to help each other out. So make sure to join that group. Information is below. We also have Instagram, where you could follow us, or more personal stuff when it comes to our life here in Panama. And there's LinkedIn as well. So as usual, everyone, how do I leave you? Continue to stay safe, stay healthy, and of course, stay passive. See you next time.